I'm here with Brian Barnes, the CEO of M1 Finance. Thank you, Brian, for joining me. I
Yeah,
appreciate
no, thanks. Thanks for inviting me.
Yeah, investing is a crucial component of building wealth. And a lot of couples know that they should do that, but we live full lives. Whether you have kids or not, you have your career, you have other family obligations, your relationship, you're juggling so much, and it seems like it's hard to get started and to maintain it. So I'm really excited about this discussion. And I'm also excited about learning more about M1. I heard from Joe at Stacking Benjamins a little bit about you. He's been
Yeah,
a leader.
he's a good advocate for us, for sure.
Yeah. So why don't you mind, if you don't mind, just taking a minute and describing what M1 Finance does?
Yeah, so M1 is an investing platform that automatically and intelligently invests the money into the companies and ETFs that you want. So with M1, you come in and you can design a customized portfolio.
Mhm.
Once you design that portfolio, we like to say it's as easy to manage as a savings account. All you're doing is depositing or withdrawing money, and then M1 is doing all the buying and selling to enact the plan that you want to that you basically told us what you want to invest in.
Okay. And what I found intriguing is that there's kind of two spectrums right now. There's the you hire a professional, they do the buying trading for you, or you do it like day to day. And then there's the robo advisors. Where would you put M1 on this spectrum, or how do you see M1 fitting in?
Yeah, so in some sense, we're a little bit in between those. So who M1 is perfect for is someone who says, I have a perspective in where I want to invest my money, whether that's in certain ETFs, whether that's in certain individual stocks and companies. I want to systematically contribute to it. So, I might want to put $100, $200 with my paycheck every 2 weeks. And I want a tool to make it really easy on me. I don't want to make this my part-time day job implementing it. I want to sort of be able to make a decision once. Here's how I want my money held, and then not have to remake that decision every single time you want to invest money. So it's really saying here's what I want to own now. Just auto contribute with regularity. So that's who we're perfect for. But in terms of we offer in some sense less flexibility than the traditional brokerages of Ameritrade, E-Trade, Fidelity. And so, people who are highly active, the sort of either professionals or those that consider themselves professionals may not be perfect for M1. And then, if your entire portfolio, if you just want to hand it off to someone else, M1 allows for that. But, we're sort of on par with a lot of different offerings out there if that's your intent.
Well, I like what you mentioned with investing perspectives. A lot of couples, they come from two different perspectives. Like my husband is very hands off. If
Mm-hmm.
someone could do all the work for him for the investing, he's great. He just wants to focus on his career, family, that's his style. I like a little more hands on. I wouldn't say I'm a day trader. I have no interest in that. But I do like to keep tabs on finances. But the conversation with couples is like, how do we find the right strategy for us? Because there's a lot of noise about passive investing versus active investing. And some people are pretty hardcore on both sides of that. So I saw that you wrote an article on your
Mm-hmm.
site about that mindset and kind of giving the pros and cons. So I was wondering, could you kind of walk me through what those two sides are and how to weigh the pros and cons and find the right sweet spot for you?
Yeah, no, absolutely. And I'll start with, I think the key in personal investing is that
Mhm.
personal component that
Yeah.
if there was a one size fits all, solution out there, no one would have this debate. Everyone would do it. The issue is, people differ. They have different objectives. They have different risk tolerance. They have different wants, needs. And so, I think personal investing is finding out what works best for you, or you in the case of a couple, you and your partner. I do agree that people it's almost like a religious war out there with this passive versus active investing. The passive, I'll lay out both sides of the issue and then sort of say where I think is a reasonable middle ground, which sort of M1 inhabits. Passive investing is sort of saying, if you take the collection of the universe of every financial asset out there, over time, it's going to have one return. And so, if you just invest in that, like on average, everyone will have that return. The more you trade, the more you buy and sell, there are costs associated with that. There are taxes associated with that. That cost is going to come out of the average. And so basically, the more you transact, the more you have costs, the lower your returns are going to be. And so the passive crowd says the only thing that you should focus on is lowering costs. That's the only thing that you can ever control. And so you should lower the cost as much as possible. And, Vanguard's become a giant, saying like cost matters. Cost is a important thing. And let's try to be as low cost as possible. And, empirically, you have a lot of evidence saying like, a passive portfolio of the S&P 500 beats a lot of active, investors who sort of limit their universe to the S&P 500. So that's the passive argument. The active argument is, costs do matter. It also matters what you own. You wouldn't indiscriminately buy anything, not first asking, but hey, what am I getting for it? Well, what are the costs? Like, if you were to go shop for a house, you wouldn't say like, I want the commission to be as low as possible. You'd be like, like how many rooms does the house have? How many, what's the square footage? Where is it? What's the location? And so the active investor says it's possible to look at those things and to, spend the time and resources and energy finding it, and then finding areas where you're getting more than what you're paying. And that if you pay less over time, the, sort of market will adjust, the price will adjust to what the thing's actually worth, and you'll make more money. And so the active investor says like, it's worth the time and energy to do that. So like I think both sides have a ton of merits. I think it's, again, a personal decision. I'd say the problem I have with the passive investing crowd is they sort of like strip out all the behavioral elements of investing. And so, they sort of say, just invest in the market. And it's sort of like, well, what is the market? What am I getting? What am I buying? And, I like to tell people who sort of come to the table with that, I'm fairly young. I'm 27 years old. And in that time, I was born in 1990. From 1990 to 2000, the stock market 5x'd. From 2000 to 2002, it halved. From 2002 to 2008, it 2x'd. In 2008 to 2009, it halved again. And then from 2009 to now, it's 3.5x. That's a pretty wild ride. And, I think people get sold on this passive investing of, hey, you're just signing up for 8.5%, 9% return annually. And it's, really like, know what are you going to do when your money halves? Are you going to stay the course? Are you going to not react? Are you going to be, super excited that you didn't pay a lot of costs while your net worth went in half? And so, I think it's more important to say it's very important to say, like, what do I own? Why do I own it? And what will I do in various circumstances? And I think that's where active investing comes in. That, like, for me, I have no idea. If the market went down, I don't know why. Like, I can't make a prediction. If I own a specific company and it goes down or up, I can make the determination of what do I think is the outlook for this company, and what do I think is going to happen, and then I can make an informed decision. And so, I think there's a reasonable middle ground to be had where it's saying costs matter, limit costs, don't overgo with trading and taxes because it'll just eat at your returns. But be informed, know what you own, know why you own it, and that'll help you, correct the behavioral mistakes.
Yeah, and I think that is a fear for some investors, and why they gravitate towards the passive is they don't want to make those, how did Carl Richards put it? There's the investment returns and the investor returns, and they're usually lower because you're panicking and you're reacting. But then on the other side, I see a lot of investors, a lot of couples talk to me that they are more socially aware. So they do want to have more control, more say over how they invest, maybe in companies they feel are respectful to the environment, are more sustainable long-term, or can be any other value that they have or maybe it's an expertise that they have that they want to bring to the table. So they enjoy the arguments of passive investing, but they still want to have like a certain piece of the pie or slice of the pie where they have a little more hands-on control. So I appreciate that. So I had a question because I'm looking over at M1 and what you guys have. So you say it's as easy as having a savings account.
Mm-hmm.
So say I decide to invest, and for the most part, I do want to invest in the S&P 500, but I'm looking like maybe about 10% of my portfolio I want to maybe personalize. Is that something I could do with M1? How does that work?
Yeah, no, so that's exactly the case that M1's built for. So instead of the traditional brokerages where you're making trades, what you're doing with M1 is you're designing a portfolio. And so everything's built around a percentage allocation, and we use pie charts for that. So you can think of your entire portfolio as one pie chart. You can start slicing that pie chart into various slices. And so you can say, I want 5% to go into this investment. And any slice of that pie, it can be a single stock, it can be an ETF, or it can be another pie chart entirely. So, you can come to the table and say, I want 85% in, the S&P. You can say, I want 85% in this, sort of like indexed portfolio that has, large cap stocks, bonds, sort of a diversified mix. But then what you can do is you can say, I want 10% of my money in my stock mix, and that becomes its own pie chart, which you can slice and dice. And then you can pick underlying securities. If you had a, like you were saying with your people who had the social concerns or environmental concerns, they can pick, companies that align with their core values. I don't think anyone takes the perspective they want to make money at all costs, right? You want to make money in things you care about and believe in, and do good while benefiting from it. So, that's exactly what M1's built for. It's saying what share of your money you want to go into various investments, and it's fully customizable, and then it makes it really easy to auto contribute to that allocation.
Okay. Well, that sounds great. I was also looking at the fees you had, and you had mentioned you can be as hands-off or hands-on as you want pretty much.
Mm-hmm.
So compared to a robo-advisor like Betterment, I noticed your fees were lower, and I was kind of curious, how is that possible if, you have human beings on the other side helping out?
So, a lot of our system is automated. So, everything is done through a mobile phone, the web application, we have both, but, it's sort of saying, you sign up, you create your portfolio, you link a bank account, and then anytime you deposit or withdraw money, the, software that we've built directs the money, no humans are involved, and that allows us to keep the cost structure very low. So this last Monday, we are an organization of about 20 people. We did a quarter of the trades that E-Trade does on a daily basis. And so, I'm sure they have 10,000 employees, right?
Yeah.
So we've built a very robust, scalable technology solution that makes us able to offer things at a much lower cost than the traditional players can.
Okay, great. That sounds fantastic. And is it true that if you start small, say couples like, what, we do need to get serious about retirement, but I'm not ready to go all in. How much is it that they can invest for free for the fees?
Yep. So the first $1,000 is free, and then we have a $100 minimum. So you can, start with a $100 deposit. You can, deposit $5 a week after that. Test the waters. You can withdraw money at any time, but those are the only barriers. But the first $1,000 is free.
Yeah. That sounds fantastic. Well, thank you so much, Brian. I know your time's busy, and I do appreciate you coming on and chatting about this.
Absolutely. No, it was great to talk to you.